I'm Tanushree YT, and today I'm going to tell you how you should react to the first and perceived to be one of the biggest economic events of the year. Yes, I'm talking about the Union budget that is going to be announced in another 3 weeks. So, we all know that the budget euphoria is set to grip the markets over the next few weeks. Corporates will look forward to freebies, individuals will look forward to tax cuts, and investors will look forward to reforms. And like we have seen in the past few months, any positive vibe from the budget will encourage investors to clamor to the select few Sensex blue chips. Now, nothing wrong with that except for the fact that the budget euphoria will not last forever. And apart from valuations, there are some other risks that you should keep in mind while investing in blue chips this year. Don't get me wrong, I do think it will be a while before any rebound in the mid and small cap stocks impact the appetite for blue chips. So blue chips will remain in favor for at least a few more quarters. Also, I do believe that the select non-Sensex blue chips especially offer attractive bargains even now. But instead of blindly clamoring to any and every large cap stock thinking that they are safe insulated blue chips, you would do well to keep these 5 risks in mind. The first, the capital market regulator SEBI is expected to enhance the definition of large cap stocks for mutual fund investments from the current top 100 companies in terms of market cap to the top 150. What does that mean? It means that mutual funds that have the mandate to invest a majority of their AUM only in the largest large caps will now have more stocks to choose from. This is certainly good news for blue chips in general, but investors who are exposed to the top Sensex blue chips that have been the biggest gainers of the past 2 years must keep in mind that some mutual fund money could shift from these stocks. And that means the top Sensex blue chips could shed some valuation multiples. So just make sure that you are not overexposed to any of the overvalued blue chips. Second, the US elections are later this year in November. Why should that impact Indian markets? Well, the US stock market is undeniably the most influential stock market in the world, and it is said that when the US sneezes, everyone catches a cold. So, extreme volatility or shocks in the US stock market is bound to have an impact on global stock markets too, including India, which means stocks, irrespective of their market cap, fundamentals, and valuations, could be subject to such volatility, like we saw during the 2008 subprime crisis. So, do not stay with the myth that the big blue chips are insulated from such risks. Third, geopolitical risks and flight of FIIs to safety. Now, whether or not the US-Iran skirmish escalates and leads to any full-blown war, the fact that geopolitical risks are looming will keep investors, especially the FIIs, very edgy. That means they will choose safety over returns. They may choose US treasuries or gold over Indian and emerging market stocks. So when emerging markets like India see a flight of FII funds to safety, the valuations in pockets of overvalued stocks may see some significant correction. And since most of the money is currently parked in Sensex blue chips, they are the most vulnerable of the lot. Fourth, a rebound in small caps. A rebound in small caps is a given. It is bound to occur at some point. Of course, it's quite possible that it may not happen in 2020, but later. Nevertheless, with money having simply shifted from small caps to select large caps all of last year, any sign of rebound in small caps could mean correction in valuations of the bloated blue chips. And the fifth and final risk, pressure on profit margins of blue chips. It is not just stocks but also commodities and currencies that could end up being very volatile throughout this year. That means even blue chip companies that consume commodities such as oil or earn in US dollars could see big swings in their operating margin. Now, such earnings volatility is hardly going to help the big blue chips that are expected to be consistent performers with strong earnings visibility, and therefore any pressure on their profit margins could mean a big blow to the valuations of such blue chip stocks. Once you keep these risks in mind, selecting the best blue chips with sufficient margin of safety will keep you prepared for every contingency in the coming year. So, do not pay too much attention to the budget noise and do not get carried away by the budget euphoria. Neither the budget nor any other economic event during the year should change the way you select safe stocks. Stay tuned for more updates on safe stocks. And don't forget to sign up for the 5-minute wrap-up, my free email newsletter, and get access to this latest guide on picking multi-bagger stocks. Thank you.